Oh, I'm still in the trade. They did not break above it. On the trade, still break, didn't break, wick, break, right? So where is all the action on the pivot that I identified before the market opened, right? This spot right here. Okay, that tells a story that we're going to go down more. Inability to break above this means we go to the next level. 6,100 to where was my target? 92 to 88. 88 was a big pivot. We hit 88.3 as the low of day. So, anyways, that's that. Any other questions on that?
Hey, Sales, I have a question.
Yeah, shoot.
I have a question about Thursday. I noticed that when the mock imbalance comes out from Financial Juice, it doesn't really give us a number. Do you know why that is?
Um, I don't actually.
Because it used to come out when Financial Juice would release it, they'd release the actual imbalance, and so you kind of had an idea which way it was going to
I
go.
don't, honestly, I don't think it matters. I don't think the
Okay.
number matters at all. I think it
Okay.
means absolutely nothing. I think the
Oh,
only thing that matters is playing the percentages. That, for
okay.
example, what
It was
Thursday we're talking, right? Thursday or
yeah.
Friday?
Yeah, Thursday we had that end of the day move that just popped, and there was a extraordinary amount of volume on the call side. So I mean, it was
Yeah.
just slammed. Um,
So
and
if you
I
look
was
at, go ahead.
go ahead, go ahead.
So if you look at what happened at noon, 12:30 into the MOC,
Right.
80% of the time, 80% of the time, what do we do into MOC? Fade the
Right.
move
It goes fades the move. Yeah.
every day. I mean, literally, it's like 80% of the time. If you just play fucking calls when it's dropping into the MOC, meaning like this is like a 12:30, so it'd be the 3:30, it'd be like 3:30 ish. It starts to come down, falling down, and look, there's support, right here, previous support right there, right there. Then this doji comes in right before MOC, and it's like, okay, we get the fuck in calls, right?
Right.
Um, and it goes. Vince, I think, alerted calls. I did not.
He did.
Um, he
Yeah.
did. Yeah, and that's a perfect example right there. Down into it and fucking nuke it. I don't think it has anything to do with the MOC at all.
Okay.
Let's
I
look at.
just
I mean,
I was
go ahead.
I was I was just under the impression that when the mock imbalance came out super heavy, that it can be overweight from one side to the other, and they can't really control the movement. Once we get enough volume go in that direction, that's how we get such an explosive move. Is um,
Same thing here. Look at this Friday. Down into it, right? Down
yeah.
into it and fucking blast. I mean,
Yeah.
it's
And
just
this is that is that the 330 imbalance, because there's one at 330, 340, and 350, right?
the only one I care about is 350.
350.
Yeah, that's
Okay.
all I care about. I don't really focus on anything else.
Okay.
Um, I think if you just do 8 out of 10 times, play with a little profits, do the inverse, you're going to win more times than you lose.
Okay.
And yeah, and keep it closer to the money. Some days we can identify when they're really going to rip it. What's MOC? I'll get it
Mock
for you.
imbalance, correct?
I'll get the definition.
Right. Okay. Thank you, Sales. Appreciate you.
Yeah, dude, no problem. It's called Market on Close right here. Hold on, let me copy this. What the fuck? Why are you doing that? There you go. You can also check this out too. All right. But I wouldn't really like try to trade it based on any information that they post on the website at all. I would just read it as a definition and that's it. All right. All right. So I get a little sidetracked. All right. So I want to start moving through some stuff. So if you guys have any questions, please fire away. Okay. I'm going to talk about, we have some newer people on here. All right. So let's do a quick broader market outlook. All right. Okay. 10-year yield. Okay. 10-year yield looks actually, let me get rid of my emails. And we can leave it there. It's fine. The 10-year yield obviously broke out. We knew it was going to break out. Now it's actually in a bearish structure. It's looking like it's going to, here, we have a legs ahead there, and it could break down, right? If it breaks down, it's going to retest this, and then it could drill further down, and then I'd expect a bounce, and this is where volatility will come, okay? You know, this is a big week. You know, for me, a lot of it's going to depend on the structure and schematic that we start to see in the overall broader market in the first 2 days going into JPOW. And then like me and Wyckoff are expecting, not assuming, but we're anticipating blood this week. And then we're going to fucking rip. So I want to be mindful of that. HYG, high yield bond market, is above my pivot at 79.43. This is bullish for the market. If we see this thing gap down and start to break underneath this, this will give us a nice indication. I've been seeing massive amounts of VIX calls hitting. So my JNK as well. It's the high yield junk bond market. It's rejected the upper pivot that I have. It needs to get over this for more higher risk assets to run, like the Qs, like tech. Okay, so this is what we're looking for. Now let's pop over the dollar. This is our China trade. This is the mock-up I have for this setup, right? Beautiful distribution setup, shoots up, pops down, rejects supply up here, and now it's starting to fully come down. This is why we took the China trade when we did, and we bottom ticked it damn near close. Okay, so we can take a look at BABA and look at how it's reacting to the dollar, right? So BABA, as the dollar tops out, BABA is here and starts to flag, right? As the dollar starts to break down and vice versa, it's moving. You can look at all the stocks. They're all in the same setup. PDD is a beautiful setup. We're going to be focusing on China this week for weekly and 2-week out trades, okay? To trade them, not to swing them. You can swing them if you have runners that are, like say, for example, we take PDD. Maybe let's say they fuck around. Let's say they gap us down slightly on Monday. For all of China, the dollar pops like nothing, or maybe the dollar is slightly green, whatever, right? And China's gap down. Some bullshit news. We're going to buy that fucking dip, 100%. We're going to buy that dip and buy a little time, and then continue to monitor the dollar, right? And then, and if it starts to rip, right? We have a gap here on PDD up at the 223 level. I expect that gap to get filled this week. Most likely, because of the amount of call flow. I think they're going to hit the gap this week. This stock has a pattern nature of making really, really big moves within a week. Look at this move. $18 to 140. Let's call it 147. So that's a $30 move in a week, right? Look at this week. This week it moved from 100 all the way up to 135. That's a $35 move. So for me to call for 123, when a $12 move in a week is not that out of the world. Okay. We have the 140s it's just pretty far out of the money for the end of the month. 430K hit the tape on him in a block. I'm going to monitor that whale and see if he's staying in. We'll keep an eye on him. If he moves out, we will most likely look to move out as well and reposition ourselves into a different swing within PDD, something a little closer to the money, a little lower risk. Okay. But if they gap it and rip it this week and get up into that upper zone, those calls are going to go 200-300% quick. Then we can leave runners in case they want to hit this upper target of this weekly wedge by the following week, right? Because we have the Chinese New Year, we have the dollar dropping, and the faster the dollar drops and the more catalyst we have with BABA earnings and yada yada yada, like this is only going to catapult these stocks more aggressively, and China loves to be aggressive when it gets going. Okay, I love all the China stocks. Last Sunday, I said, hey, China's going to fucking rip. And this is why the dollar, blah, blah, blah. And we have tweezer bottoms on the weekly for Baidu and Baba. Here's Baba's tweezer bottom. These are powerful reversals. I talked about the last time we've had tweezer bottoms on the weekly. We get nice big fat moves up 2 to 3 weeks out. Boom, boom, boom. Look at same with Baidu. Look at the Baidu tweezers. Tweezer, boom, boom, all the way to 95. Tweezer, all the way to 115. Tweezer, we're just getting going. Let's take this bitch up to 102. Okay, right? So this is where I want to focus on. So we can only pray and hope that they give us a little bloodbath on our China stuff on Monday. That would be fun. Okay. Our tiger calls. This is a really weird chart. It's probably not drawn out properly, but it is a bullish setup regardless. I like 2026 $20 calls. I like 2026 $10 calls, which is what we're in. We're also in April calls for Tiger and, the $7 calls for next week. I alerted them, but I did not hold them. So I think what we'll do is we'll leave this here because this is a hidden trend line that's definitely important. And once it breaks this spot right here, it will rip. Yeah. Once they break this wick at 852, it's gone. You could do commons on this. It'll most likely shoot up to 11 really, really quick. So we want to keep an eye on Taiga. I don't care about NEO. I don't care about any of the EVs. I really don't give a shit about them. If you want to trade them, go ahead. I'm not even close to interested. All I care about is shit that fucking moves fast. That's it. That's all I care about, right? K-Web, another great setup. Really kind of weird situation going on here. Let me see if I can tighten up this daily here like that. I mean, is this the new channel? Do we tweak it? I mean, that's important. So I'm going to take 2 trend lines and I'm going to draw it there because there's a reason it rejected there. Supply, but it could be in a bigger channel that it could be trying to break out of. You have a inverse head and shoulders kind of hidden right here. You have on K-Web. So if it does kind of fill this gap here at 29 and change, if, we're buying that shit, it's going to do this up and out. We're going to get the FV, the fair value of this at 35. All right, so that's China. All right, let me check a couple more things. Okay, Roku is another swing that I absolutely love. Let me put these together. AI and D-Dog and Snow and Dell and keep an eye on. Oh, we can't do that. That's the wrong channel. Okay, so let's talk about Roku. This is Roku Weekly. Okay, for swingers, for me, I like to focus on the daily and the weekly. For longer term swingers, And even on the weeklies, like this is the schematic of an accumulation pattern, and it's about to fucking rip. I've been saying this for a while. Right into here, this bottom zone. They're gonna rip this. This is an accumulation schematic. A2, A2, A2. I think this is it, yeah. Okay, so you can see very clearly this has been fully accumulated. Down here's SC, AR, ST, B1, BST, B2. Here's the second peak right here. Right there's the lower high, and it drops down. Doesn't do a spring. No spring. This is A2. This is the wrong picture, but whatever. Doesn't matter. Point is they did not spring it. A spring would mean they do this. That's a spring. This one is A2, so there's no spring here. Okay. So you can see that we are in this zone right here on the weekly. All right. So we are looking for this move up and out of the range of this high or at this high on these. And that's why we've been targeting the February calls and the March swings for the 115 strike. Okay. This is just this one's going to catch people off guard. And I think it could happen this week, actually. I would love to see them bring her back down, give us a fake breakdown in this channel. Let's now take a look at the 4-hour. Like this one, I mean, you could take commons on this and you just sit and park your money there and you'd be good. So here's the actual channel that we're in. Okay, so maybe they give us a fake breakdown down here. If they do, oh my God, we're loading and loading and loading. Because why? Our risk is so tight. It's right here. We can get this area and we'll load heavy. You know, first they gotta break this level. This 80 level, they put a block in here. So we'll put an alert there just in case they hit it and hold it. Okay, so this is Roku. I love this setup. I think it's one of the best in the markets. AI, really nice setup too. We traded this up and out for a small gain, and then we traded it again for a small gain, and then now it's getting close to that point where it needs to break out. If it doesn't break out, it's going to flush back down to the apex of this wedge, right? So here's the apex of the wedge. Right there, and you can see that it's holding the 1-hour trend. All right, so it's within this, right? And what I like about this setup is it's had 3 tabs. Yeah, that's fine right there. So we got 1, 2, 3, 4, 5, 6 tabs on the bottom, right? On the hourly, which usually leads to a breakout. Then they hold trend. Here's our trend line right there. And now we just want to see this thing slide up, right? Maybe they come down and backtest this supply here at 31, and then we'll look to get into the weekly calls or even the following week $35 calls. They'll be really cheap. And that option chain for this upcoming week is really nice call side, really nice. So I would like to see this. I'm going to keep this on close watch because this is the one that you could see this at $39 by the end of this week, right? And so if those 35s are $4 in the money, it's going to be like a 1,400% play. All right, next up, D-Dog, similar setup. Take a look at the daily. These are nice swings. You could buy more time on them. Personally, we have plenty of swings. I'm not trying to have 30 swings on, so I want to be able to, if something sets up really good, like, Roku, Baba, Baidu, all those, yeah, you take the swings, but like these kind of stocks, like, to me, this is another good opportunity to swing. D-Dog is sitting, I don't know why I have this support here. Maybe I draw another one. This. Yeah, I don't know why I have that. Whatever. That's weird. Maybe it's hidden. I don't know. Let's take a look at the 4 hour. Yeah, this should not be there. That's funny. Yeah, that's perfect. You can see how price came in to trend line. This is a trend. So let's talk about the trend line strategy. Okay, trend line strategy, very simple, works on all the time frames. Okay, so except for the 3 and the 1, you don't really want to use it. So here's your anchor of a low. Okay, then they tap it again. Now you've drawn the trend line. You should have the trend line drawn immediately. You get 2 taps, let's draw the trend line, especially on the 4 hour. They bring it back into the trend line, you buy that shit. Okay, and you can ride it. Okay, then it comes back in again, buy it. That's a big wick. If you miss that, then you buy this one. That's an easy trade. You keep buying as long as it's holding this trend line. Well, we've tapped it again into a falling wedge on the 4 hour. 1 tap, 2 taps, 3 taps off the crotch of it. Here's the crotch right there. Now we're up, out. Give me a back test of this at 37.68. Okay, and then we'll take this bitch up. That's what I'm thinking right there. Beautiful stock, AI exposure, a lot of money coming into AI. We know that. That's the tap and go. Okay, trend lines drawn, tap, go, tap, go, tap, go, tap, go, right? All right, now let's go over to the actual markets, and I'm going to show you the breakdown and the fake breakdown. This is another trend line strategy. Okay, let's go to the 5 minute. Okay, here's our trend line, right? Now this is a fake breakdown. All right, you have our clearly identified trend line here. It's actually, you know what? It needs to move up, I think. Yeah, there. So you have a wick there. What day was that? This Friday, 2:45. Yeah, this thing actually should be. Oh, I think I had 2 trend lines actually. Yeah, there we go. There's one, and then I drew another one, I think, from this anchor here, and had this going there. Yeah, I had 2 yesterday, 2 on Friday. Okay. So this is my pre-market trend line. I'll highlight this in yellow. So this is my pre-market anchor, right? From here, from this low here on Thursday the 23rd, right? That pre-market low, and then it tapped this Friday pre-market low. And so I drew it through, and you can see here's tap and go, boom, boom. And then all of a sudden it breaks down, it breaks back above, right? So it's looking like a fake breakdown. Then it breaks down, and then it reclaims. That's a fake breakdown. Okay, these trend line strategies may sound simple and stupid, but they fucking pay heavy, right? So let me see here. So they pay really good. So obviously you're not buying calls here, okay? Because on this move, it's closing below this on the 5, below that trend line. Then it reclaims it. Now it's dancing around it. Okay, once you know that this is a big level, which you should know that 108 is a big level, then you're like, okay, well, let me take a look at the candle structure off that level, right? This is how you know it's going to be a fake breakdown, right? The candle structure was a hammer right here, not a full clean hammer, but very, very bullish wick right here. That's a very nice bullish wick right there. They break it underneath the level, you're cautious, then they fully engulf it and close it above. And now you can enter in here with your stop below 108, and you can confidently say that this is going to uptrend and break out. And it did, right? And where's your risk? Well, right here at 108, right there. But you got in here at 109, right? 109, 110, and you can ride that up with a tight risk. Or you could wait until they close it above this trend line, re-enter and ride it. It's the fake breakdown. Okay. And then you have the actual breakdown, the big breakdown. Okay. So you have your main trend line. Okay. They keep dropping it under, wicking, fake breakdown. Then you have a breakdown, fake breakdown. Now these retests of this trend line are failing. And you can see that right here. You see it right here, right here. These are failed retests where this candle was support, right? Failed. Another one failed. Okay, now it's broken. So now this retest is failing, right? So instead of a fake breakdown, now we're getting a failed retest breakdown underneath this trend line, okay? Now we also have identified from this trend line to this anchor, as it's shooting up, this is a spot that could be support. And look at, they pinged it. Boom, again, 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 again. Like 1, 2, 3, 4. Like that is a notable trend the algos are buying off of, right? And as soon as that cracks, then we flush, right? Wicks above, breaks down, and then here's the failed retest. Now we're retesting this trend line here, and it's failing. And then here on this wick, it gets drove right underneath it. Now you know we're flushing. And obviously here's the real deal. The retest failed, the reclaim failed, and then we get the big move down, right? Big move down. So that's the tap and go. That's the fake breakdown. And then that's the breakdown and failed retest. Okay. The breakdown without a failed retest is just simply where you do not get a retest of the trend line and it just flushes and it goes like this. Here's the candle, shoots up, shoots down, and then it just keeps going down. There's no retest of the wick there. No retest. Right? So highly effective strategy. All right. Next up. All right, so since there's only one guy on here that's new, is there anything else you guys want me to cover, or do you want me to? Because I have on the list a lot of stuff that we've already covered with most of you guys, like Tooth Dude and Gaboon. You guys are new. Is there any specific things? So I have on list. I was going to cover. We did trendline strat. Do you guys want me to cover? EMA strategies and timing entries. Okay. All right. I'll do that. Okay. So this is a strategy that's highly effective. And I use this a lot for swings, for getting high quality entries on swings, and also finding stocks that are going to break out really quick. Okay, so I have my EMAs up. I have the 13 EMA, which is blue, and the 21 EMA, which is green, and the yellow, which is the 200 EMA. All right, so when I'm looking for a stock to break out and make a big fast move after a downtrend, there's a couple of things that I like to focus on. First, I want to see what the EMAs are doing. They're in a downtrend here. Okay, we don't fuck with calls in a downtrend, right? We just leave it alone, right? But you could take puts off, rejections of key levels, right? Or an overextension on the hourly of price going above the 200 in a downtrend or above the 13 and 21, you can catch that move down. All right, so I love earnings season one. We're going over swings and an EMA strategy right now for those that are new on how to identify breakouts from a bottom, how to bottom tick stuff, right? So when we're looking for a swing to set up, we look at the EMAs, okay? Your downtrend, right? Now, you don't fuck with calls in a downtrend. You can be like, oh, well, there's an uptrend here. Yeah, well, that's not really the case because this 200 is like very, very steep, right? Now what's happening? The EMAs have bottomed steep, and now they're actually, let me see here. They're in an uptrend. Oh, yeah, they are. They're actually in an uptrend, a slight uptrend. But the main point is they're flat, right? The EMAs have flattened out on the hourly. Okay, I like to use the hourly, so they're flat now. Slight uptrend. Here's the low, and here's a new low, right? Prices underneath them. One thing that you'll see a lot of times is when you're identifying a swing that's about to break, is be very careful of trying to get in too early, right, with size when the EMAs are flat and starting to curl up, because you will get rejections, hard rejections periodically before it really breaks out, right? So in this position here, what's happening? Well, gamma is negative on Apple, right? Puts are in control, right? And those puts being in control are not being forced to get out because the downtrend is still intact and it's still aggressive, and those deltas are high because they're in the money, right? Now, on this wick right here, it's like a warning shot to those guys like, hey, trend might be reversing. So now you start to get, and then on this wick right here, that's like saying, you guys better get ready. We could have a big move up, right? And that's saying, so now you have speculative call buying is starting to happen in this range, right? Sweeps are hitting, months out, weeks out in this range, right? And so now call buying is increasing, right? Which is increasing gamma positive, and put buyers, right? They're decreasing. So puts are decreasing, and gamma, negative gamma, is going down, right? Because puts are getting realized. That's what's happening through the price action of supply and demand as the buyers are getting out of the way, or they're getting out of the way. Buyers, the calls are decreasing in value. Negative gamma is increasing. Then it comes to a halt. Buyers step in. Put buyers are starting to realize their profits, and call buyers and the buyers in general are starting to step in, and they're starting to increase the positive gamma, which creates more upward pressure on the stock. It doesn't mean it's going to go fucking to the moon, but it does mean there's probably a relief bounce, or there could be a nice big upside move. Typically what I see is when you see a big extension away, especially on Apple, away from the 200, and then it starts to base here and starts to curl up into a nice structure, what we have here building, right? It's going to compress. This is starting to compress, right? We could take a look at this and say, okay, where's that trend line there? Yeah, we'll go right there. That's kind of clean. It's pretty close. Maybe it's here. Let's see if it's that spot. I'm just trying to tighten this thing up. Yeah, that's money. Pretty close. All right, so we have a really nice structure here. And when we talk about compressions, we talk about a tube of toothpaste. Right, the simplest way to look at it. This is your tube. Okay, here's your tube of the toothpaste, and here's the price action is your toothpaste. Yeah, right, the actual paste in the tube. And what's happening is the EMAs are in a downtrend and they're flat. We know that. But now you have a big rejection here and here. Okay, and then a big buyer stepping in here and here. Now we have range. So now the toothpaste is going through schematic. Oh shit, my son's up. Just go back to bed, buddy. It's going to compress in here. And as long as this toothpaste can hold, it's going to shoot up aggressively and it's going to go straight to this 200 fast. It happens every time. If this breaks, we get the fuck out because our risk is defined, right? We get out and we wait until structure changes. And it's very, very easy to identify this. And then the EMAs will curl up, and start pressing through the 200. They'll reject, it probably flags out and goes higher, right? So that's something that I'm looking for on Apple. And that's the EMA strategy. All right, my son is up. So I'm going to, let me think here, shit. One thing I'm going to cover quick, and then I'm going to cut the stream early today. Just because I don't have too much stuff to handle with him. Shit. All right, last thing I'm going to cover is this. Where's it? The VIX. Okay, the VIX is in an interesting spot. Okay, this 4 hour is what I'm watching. Okay, I want to talk about this for a second. Okay, so you see this format here, or this structure in the VIX right there. See how this is laid up? Look at this. US 500 on the daily. It had the same structure here on the RSI. Same structure. And it fucking ripped out of that RSI. So my thought is this has a high potential of repeating this type of a pattern based on RSI, and also the structure on the candles on this 4 hour is very interesting. So I think if anything, that's why I'm leaning bearish this week. You know, we could see this thing kind of fake breakdown and then get like this, or it's going to go up, test, and go. You know, so this is bullish divergence right here on the VIX 4 hour. So that's suggesting that there's a move to the upside. So that's one thing I just want to say about this week is I want to be very cautious and be very, very particular about what we're buying, what we're entering, and how we're going to navigate our positions. This week, you don't have to be Tommy Tough Nuts and try to fucking make $1 million. You know, we just need to, you know, we really want to be sizing down, picking our spots. And then when it's time to take our entry, we get in and we lock it in. This is a week where, you know, if we catch a good move, you can take, you know, $500-$600 to probably 10,000, you know, if we get some range. So just be mindful of that. We'll be watching MSTR, coin, you know, we're going to be watching Roku, China, and even oil stocks. Maybe they don't really get that much movement, but mainly just the Bitcoin stuff. And then AI, Roku, D-Dog, and then China stuff. So we have our levels. We'll be posting schematics here later today and into tomorrow onto what the patterns we're looking. If you guys have any questions, fire away. Sorry to cut the stream a touch short. Typically it's 2 hours or more, but I got my son. I don't have help, so I need to take care of him. It's my last day with him, so I don't get him till next Thursday, I believe. So I want to spend time with him as much as possible. But I hope everybody has a great day. And if you have any questions, please feel free to ask. Okay. All right. Take care, guys. Peace. Oh, the last thing I will say is on SPX for this upcoming Friday, the whole chain is structured in a way where it can go either way and they're going to get paid. So we'll be watching that very closely. So the straight change is heavy call side. However, there's so many open interest and so much volume and open interest on the put side that they could literally dunk the market and make triple of what they have on the call side. So I just want to be mindful of that. Take care, guys. Have a great Sunday. Peace.